Good morning, and thank you for joining us for our coverage of today's Prospective Planting Report and the quarterly stocks numbers. And let's go ahead and get a screen up here and we can kind of get a feel for what we have going on today. Let's start with this. So, what this report is, this is a survey of farmers, and this is going to give us an idea, as of the survey is usually completed about a week before the report, what farmers think they're going to plant and how many acres of assorted things. So right now for corn, the survey of Wall Street analysts has us planting just about 91 million acres of corn. 89 million was what we planted last year. Soybeans, 88.2 million. Last year we were just about at 91 million. When the report comes out at 11 o'clock, these fields will populate and we'll be able to see what all the numbers are. For wheat, we're looking at noticeably higher winter wheat acres. For spring wheat, we are actually looking at some smaller acres. And with that, I've been picking up some things from assorted friends up in the Dakotas and things that we might see smaller numbers. The weather has been a little bit rough, and you combine that with some better soybean prices. We may see some of those acres move over into beans. I know they are looking at seeing some fairly severe weather coming in over the weekend, and we're going to see some pretty good snowfall, particularly in North Dakota. So that may add to their problems up there. They do have a lot of snow still on the ground, and that could also affect the Durham wheat numbers, which are also looking to be a little bit smaller. One area that I think where we may see a surprise here is actually the cotton number. Right now we're at 11 million acres. Given the cotton prices and where soybean prices are right now, and our continued firm crush margins and our soon to be increased crushing capacity, I think that may create a situation where we could see the cotton numbers be a little bit of a surprise. Right now, the cotton the fund position in the cotton is noticeably short. So if we do see a surprise and this number does come in smaller, there's a potential that that could be a little bit rough on the cotton. Moving on to the quarterly stocks number. This is every quarter. Think of it like a fuel gauge. At harvest, we have a full tank of gas. Then every quarter we get it, we have three-quarters of a tank, half a tank, and then we get down to that last one. So the survey has us noticeably lower corn stocks, noticeably lower soybean stocks. These are from the first report last year, and then we see all wheat stocks. So we'll see just exactly what we get on this number. And again, the survey numbers, pretty good for corn. They're a little bit low on beans, and wheat, they're pretty much in line with what's expected. So we have all of this to look forward to here in about 8 minutes. But for right now, why don't we take a look and see what the markets are doing? So right now, corn is actually doing noticeably better. We're up 6.5 cents. Usually in front of these reports, we see fairly calm markets. We have seen some improvement with corn exports. Over the last 2 weeks, we've seen a large number of flash sales totaling, probably pretty close to 3 million additional metric tons of corn. Most of this is getting bought by China. Some of it was sent to unknown destinations. Now, this is good for the market because we are lagging on corn exports noticeably. And if we can get those to pick up, that's going to be supportive to prices. The other side of the coin of this is we are talking about a situation where China is coming in and buying. And if you've been a trader in the soybean market, you know China can come in here and cancel these at any time. And right now it looks like they're buying coverage to make sure they have supplies available. And they want some backup if they can't get this from Brazil. Along with that, the Argentinian crops have gone from very bad to even worse, and we are looking at meaningfully smaller crops. The weather there is being very stubborn and has not improved. So any ideas about the weather finishing up and improving a little bit just aren't going to happen. So we're going to be looking at materially smaller Argentinian production. It's going to be offset by the larger Brazilian production, but global demand for corn remains good. And if we can see, some continued exports, that will, in turn help our balance sheet. I'd like to remind everyone that our first look at next year's crop will be the May WASDE. We'll have a WASDE coming up here in April. I see Brooks has joined us, but he has joined us as a panelist. So I think he may be experiencing or actually not as a panelist, but as a listener. So he may be experiencing some technological issues. So right now, the corn market, we're seeing a little bit of a change. Soybeans are doing much better, and this is being driven by crush margins. As you can see today, soybean oil is moving up nicely. The biofuel mandates are working to push soybean oil higher, and this is changing how we look at the soybean crush a little bit. Crush values have been noticeably elevated, and we've done materially better with those. And that in turn is going to help soybeans out, and that's going to be something that's going to be continued support. As long as we see these elevated crush margins, that's going to work to help soybean prices stay firm. And this is where my thinking, around the corner, when we see what actually gets planted, we may see a situation where we might see soybeans take a little bit of favorability again this year over corn. And I think over time, as we see ethanol use flatten out, this is something that's going to be an evolutionary process that's going to help us. Moving on to wheat. The wheat market is continuing to struggle. We are doing a little bit better. There are concerns that Russia may not be able to export as much wheat as they have. They have cut crude oil production, and this is cutting the amount of crude available globally and specifically going into Europe. So that is one of the things that's kind of underpinning the energy markets as we're seeing a renewed rally in crude oil. Chicago wheat in particular has a real struggle with $7 a bushel. We've tried to trade over it a few times. Every time we get above it too much, it's like somebody has a hammer and they're hitting a nail and they drive it right back. Kansas City wheat, though, has improved and is holding up a little bit better. We have some crop conditions in Kansas, particularly in southern Kansas and the southwestern part of the state, that are going to lead to some meaningful production losses, it looks like. Right now, the current crop estimates are, the worst, not quite the worst, but pretty close to the worst we've seen in the last 5 years for production. It's very, very early in that crop, and if the weather does turn, we could see some improvements in that potentially, but that's certainly something we can't count on. Talking about the weather, the La Nina has been officially ended, and we are now in a neutral pattern, and we are moving towards an El Nino pattern, which is better for crop production. There are some ideas that we could be there in the summer. Most of the ideas and the meteorologists I work with think we're going to see a change on this, more likely coming into the fall, which would mean a snowy and wet winter in some areas. We're still dealing with drought in parts of Nebraska here, particularly north and east of me here in Omaha. The drought remains very intense. We are going to pick up a little bit of moisture again over the weekend. Some of that snow from the Dakotas is going to make it, potentially as far south as here. So we may see a little bit of a relief, but we're still a long way from getting that to where it needs to be. So that is one problem. But hopefully, as we get through the summer, that evolves a little bit. We did get some inflation numbers this morning. The PCE core inflation numbers came out, and they were a little better than expected. We're seeing inflation easing on all fronts. We did see personal income and personal spending both come down. Spending came down noticeably, and that is making life a little bit easier for my friends back in New York on Wall Street, where we're seeing stocks doing a little bit better, and we're seeing interest rates back off a little bit. Interest rates have moved up a little bit over the last week and a half, and part of that is the banking crisis, as the media likes to call it, which has really so far been two banks that may have been run in a questionable manner having a problem. It hasn't spread, and that is creating a little bit of relaxation in the financial markets, and that's making things easier. One thing we need to be watchful for is crude oil here. We're up another almost $1 a barrel today. We're up $8 a barrel over the last 2 weeks. So far, the components, particularly diesel, hasn't really kept up too much. It's keeping up now today, but we haven't seen too much in diesel prices, so we're not seeing too many problems with that. So that should work to keep inflation a little bit more under control. and that's something that we need to be worried about. One place where we do have some concerns, and these are becoming more material, is the livestock market, particularly the cattle market. We saw cash cattle move up somewhere between $3 and $6 a pound yesterday, which is in a cash market unheard of. The packers had to step up and they were forced to buy, and this has crushed their margins back noticeably. And how that's calculated is you look at what the cutout value is versus what they have to actually pay for the cattle. When the price of the cattle goes up and the cutouts come down, which they have a little bit, that means they get squoze. So eventually this is going to have to resolve one way or the other. The most likely resolution of this, especially as we're coming into grilling season, is that we're going to see cutout prices go higher. And what the cutout is after they cut up the animal is what you actually see in the grocery store. So again, we're looking at the potential for this moving higher. The feeder cattle market has moved up noticeably and remains very firm. And this is supportive to the live cattle market. And this is indicative of that we are going to see tighter supplies, which every USDA report pretty much is indicating that we are going to see that. Well, we're getting up here pretty close to our report time here. So let's go ahead and switch screens and get to the report screen so we can get our first impressions of what's going on with this.
Only, can you hear me?
I can hear you. Welcome, Brooks.
I know technical issues for some folks trying to get on besides myself. So you've covered all of the good stuff. Now I'm just here for the release, right?
Pretty much. You've got 26 seconds if you have any bright ideas.
I wanted to make my call after the report came out, so that way you couldn't be wrong.
Oh, yes. The benefits of hindsight.
Looks like trending higher on corn, definitely going into the report.
Yeah, we are feeling better. I think those flash sales have been supportive, and I have a sneaking hunch we're going to do a little bit better on soybean acres than expected. Some of that I think is going to come out of the cotton, and that might leave corn feeling just a smidge tight. So here we go. It's 11 o'clock, and we're waiting on the report. And it looks like, well, you know, the USDA and those folks in Washington can be a little bit slow sometimes, and we're still waiting on the numbers to print here. Doesn't look like they've come out anywhere else, or we'd be seeing the market moving noticeably more. And I always love it when this happens. Oh, we're seeing beans move up noticeably. The report may be out in some places, but I'm not seeing the report print yet here across the news wires. I'm going to add another squip. There we go. So we have corn acres. We were expecting 91. We've got 92. We've got soybeans. We were expecting 88.2, 87.5. Woohoo, look at that. We picked up a little bit on the wheat acres. We're noticeably higher there. Spring wheat was something that would be a bit of a question here. Spring wheat came in again a little bit under expectation, so we're just going to have to see how that plays out. The cotton acres a little bit higher than expectations. So we can switch right over here to the market. We can see what the market reaction is. And let's go, because we do have things. Things are in fact moving. And why can't I get this screen? Hold on one second here. Let's move this over here. Turn this screen on. And there we go. There's a reason I'm not a TV producer for the NFL. I'm just not that quick. So there we go. As you can see, we've got corn trading heavy volume here. You can see every time it flashes, that's a tick in a trade going on. Corn doing okay, up 6 and 7 cents. But here, the soybean number, we're up 30 solid cents on old crop. New crop is up 18 and a half. So we did see a bit of a surprise there. The big surprise here is that soybean number, with soybean acres coming in just about 700,000 below expectations and noticeably below last year, where corn is running almost 2 million acres higher than last year.
Something interesting to look at right now as the trade goes on, you'll see new crop corn is actually a little lower, 0.5 cent lower, which, you know, we're dealing with stocks versus the acreage. And Sterling, these reports, I think they're made to be scrutinized, especially this one right here. And 92 million seems extremely high on corn. And a lot of times this report sets the stage for the June 30th report. I think the June 30th report carries a lot more weight because we've actually got that corn planted, and 92 million seems like the odds of that being lower on June 30th seem pretty high to me right now. So new crop corn, the disappointer on the screen, down 3/4 cent right now.
Yeah, that number seems to me to be very aggressive. And the speed at which the American farmer can put this crop into the ground is obviously amazing. And what that speed does is that increases something called optionality, meaning you have more time to make a choice. If you want to switch, that availability is there. And that is something that can end up where we see this corn acre number maybe get a little closer to what the actual survey is and a little closer to last year's number. And maybe, if we see beans continue to rally here, and especially if we can push right now new crop at 13.17, we get that closer to $14. That may very well invite some additional acres going into soybeans. For the quarterly stocks here, let's go ahead and switch over and take a look at the quarterly stocks number. And let's there.
As Sterling does that, we look at these numbers, and we've seen beans just really kind of tread water on carryout numbers, and this would be what was left over in August versus today. Corn has actually bumped up a little bit in the WASDE reports over the last few months to where we're about 1.3 billion. But when you really think about these old crop stocks and how tight those two numbers are, especially on soybeans, it's really tough. We've talked about this a lot, to find 210 or 220 million bushels in the U.S. that are supposedly going to be left around here in August. And when you think about where they're located, where they're not located, it's essentially there's going to be places in the country where there's zero supply of beans. In other words, they're not evenly distributed. Corn, surprisingly, the same way. So a tougher crop out west. And when you think about how we use corn versus how we use soybeans, 1.3 billion is extremely tight. Just kind of think about this. Mom and pop feeding operations, do they have corn left in bin bottoms? Wet, dry mill, do we have bin bottoms left in plants? We've got ethanol. We've got major feedlots out there. We've got farmers that hold a little bit of corn over. 1.3 billion is really tough to find consistently across the country. What does stocks tell us today we're at, Sterling?
Well, the big surprise here, we were looking for 1.728 for the soybeans. We came in at 1.685. So that number is noticeably lower than expectations. And the revisions weren't any big deal. And we see corn here, we were looking for 7.47. We came in at 7.40. That is creating strength for the old crop. That is why we're seeing, old crop beans up 25 to 30 cents here. And we're seeing new crop doing better, up 16 or 17. So this number came in a little tighter than expected. For wheat right now, Chicago wheat is at 681. It's down 10.5 cents. So this number is a little bit of a surprise for the soybeans, or for the wheat, excuse me. It is a little bit bigger than expected. And once again, as much as I try, I really am a cheerleader for the wheat market, thinking that we can do a little bit better. And every time I get the idea, it does. Somebody comes in here and steps on it. And once again,
pretty amazing, Sterling, on that wheat. I mean, you talked about that gas tank indicator, and we've talked about that a lot with commitment traders. They're extremely short. They're towards the empty portion of the gas tank, which means you should be a buyer. We see carryouts operating at lower levels in the U.S. than we've seen over the last 10 years. We see maybe up to a quarter of Ukraine's prime wheat ground maybe not getting planted this year, but we continue to sell it off. I'm like you. I want it to go up. Everything's in place for it to go up. It just doesn't seem to be able to make it to that next level.
And what that's going to take, and we have another new problem. Russia has cut their crude output. Russia may stop exporting wheat. So that is one particular issue. Generally, if I trade wheat, and you know the old adage, trade wheat, you sleep in the street. But what I am thinking here is the better wheat, Kansas City and Minneapolis. If the wheat market begins to turn around, those will be the better performers. And I haven't done anything breaking down the Kansas City Chicago wheat spread in a while. But if we're going to do better, the first spot would be Kansas City wheat because that is that crop in Kansas that is not seeing really great weather right now. And one other thing, when funds buy corn or soybeans, for some reason they just love to sell Chicago wheat against it. So if we see some impetus for the funds to buy corn or at least not sell it, because funds are right now short corn, that is something where we could see eventually Chicago will catch up. But I think if you want to catch the tiger by the tail in the wheat market, you have to look in Kansas City or Minnesota, where they have no problem coming in and being net buyers. Where in Chicago they just don't.
Sterling, I'm getting a few comments on text, and I think we've had one similar to this on chat. Is that we've been focusing on old crop here, and I'm going to take us in a new direction on new crop, and it's already the dreaded words of and I hesitate to even see them, prevent plant, are starting to creep into vocabulary, and we're way early. We know that on the call, we're way early, but certainly with the South being wet, I think they've got a couple people that are listening are down in some high tornado threat areas this afternoon. And then you've got snowfall, I think projected for somewhere around maybe 16 inches in parts of North Dakota in the next 24 hours.
16 to
You can't
26
help but think
inches.
that 26 inches. Yeah.
16 to 26.
Yeah, you can't help but think that maybe we're going to be delayed. So that 92 million, I'm going to put some big question marks on that 92 million corn acres that came out. I just the Delta's wet, and to your point, I think it leans towards soybeans. And while it's early for North Dakota, we got a long way to go. You can't help but think if you've got snowpack in April, it looks tougher and tougher for those early planted crops up there. So good points
Absolutely.
for those of you that have texted me.
Yeah, that is something. And the weather here in Nebraska is, well, we're experiencing high variability. Yesterday I drove 15 blocks. The temperature went from 58 to 68 degrees in 10 minutes and then 15 blocks. And yesterday we saw a high of 75. It's 68 out there right now. It's supposed to snow tonight. And we're going to be back to 71 on Sunday, but we're not going to see any temperatures really above 60 for the next week and a half after that. The lows are starting to get a little better, and we're starting to warm up a little bit, but we're starting to see weather that's more like March, and we're moving in. Today's the last day of the quarter and the last day of March, so we're starting to see weather that it's not enough to raise a flag yet, but we still need to be concerned, and we still have burn warnings around here. It's still, while the drought has abated a little bit, we're still way behind.
While I don't think this has happened across the country, where I'm at, I'm in extreme southeastern Illinois. There's actually been crops go in the ground the last 2 to 3 days. So that's about average for what we've experienced in the past. Maybe a little bit behind last year, but there are some places where we're starting to see some activities. And I think normally we'd say early, but I think more and more this is becoming the norm.
Yeah, and I picked up some stuff that down in Louisiana we've seen actually some very good progress in getting things planted. And this is again quite early, and let's keep our fingers crossed that that works out because if they're early beans, that's the best way to get things done. But it's going to be a bit of a variable planting season again this year. Hopefully, by the time we get to we get to June and July, the weather's evened out a little bit, and we're seeing some more precipitation and a little bit less of this wind. We're having wind gusts here of anywhere from 40 to 60 miles an hour over the last 2 or 3 days. And we know what a problem the wind has been really the last 3 years, and this is not helping the dry conditions.
I think those are supposed to hit us this afternoon. We're going to catch up with your win this afternoon. Let's talk marketing for a second here, Sterling. And And I'm going to assume, I mean, we've done a lot of WASD meetings. We've done a lot of monthly marketing meetings where we talk about specific marketing ideas here. Let's sit back and talk about this. Let's focus on corn and beans here for just a couple minutes before we hang up. First off, I think most of the old crop is marketed. If it's not, this is still a pretty good time to do that. Basis levels are historically high, a pretty good time to take advantage of this little run right here. A lot of farmers don't like to have corn in the bins past planting. So there is a little frenzy here at the end of March and beginning of April to get those bins empty. If you're going to have to do that, I like the futures level here on old crop. I think we've had a little bit of a rally. Technically, we look pretty good. Pretty good time to sell, in my opinion. New crop, though, new crop's sick. And, when we see futures in December in the 560s, and you can see with Sterling's screen there, 564, we're now down 2.75 cents on that D's option. We will have chances, I believe here, folks. We've got to be realistic in our expectations. We've also got to be, our timing has got to be better than it has been over the last 4 years. And what I mean by that, I'll cut it down to three. We've had a lot of opportunity the last 3 years to pull the trigger on corn marketing many different times during the year and see really good levels. I think the 92 million acres shrinks. I think we should have opportunities June, July, maybe in August as well. But I like June, July for picking off some of those early times.
Yeah, and looking at the chart here, it is a bit of a mixed situation. We see the moving average is actually crossed in a bullish manner here, and we got a little bit of a bounce. Today, we're kind of flying all over the place, but this oscillator down here at the bottom of my screen, the stochastic, is trying to give us a sell signal. One thing I would note, you see this area right here, $6 a bushel. That is going to be on any up move. That is going to be a resistance area. So if you start to see this old crop here, which right now we're at 566, we start seeing our trader 30 odd cents higher. You're getting, I'm not saying you sell the whole load right there, but be ready to do
Right.
something.
How about beans? We see beans a little bit more reactive on the November. I've been for a while. I've liked a starting point around $14 November futures. What say you, Sterling, on that? Do you
I
like
would
that starting?
I like the idea of $14 quite a bit. We came down here ferociously with the beans as we had some fun selling, and it would be real interesting to see what today's COT report looks like. $14 again, just like corn, you can see right here. This is where you're going to attract sellers, or moreover, if we can keep the funds long beans, which they're long beans and short corn, which is not normal, folks. That is not normal. They get up around $14 and they happen to be long this, and that would correspond to, let's call it 1560 on old crop. They might be inclined to start letting positions go, and that's probably a very good area, assuming we have weather that is going to be moving back more towards normal. My one caveat is here we do have very strong crush margins. That's going to tend to be supportive to beans. So if I had to pick one, I'm probably more, I think the beans have more potential. The Kansas City wheat, the corn, we're going to have to see because we have had those good flash sales. 3 million odd tons going to China. That doesn't mean they're going to take it. And they can just as quickly cancel those as they took those purchases. That happens. This nice little bounce we've had in the corn market can evaporate in a hurry on old crop, and that's just going to cast a shadow onto new crop.
Yeah. Well, we've set the stage for June 30th. And I hate it that when we go from one report to the next, 5 minutes after one report's done, we're already starting to look forward to June 30th. But that is the big one of the year. And we've kind of got these baselines to measure that by. And, we're going to second guess the acres over the next 60 days, 70 days. But that second guessing is also what adds volatility to the market. So, got one last look at the live markets for us, Sterling?
I sure do. And one thing, we do have an April WASD and a May WASD before we get these June reports. And actually, we'll have a June WASDE too. Now, that May WASDE is the first look at what we actually see for the new crop. Usually, it's just a repeat of what we saw from the Outlook conference. My one caveat here, we've seen these flash sales of corn going to China. If they go to China, that could push the USDA's hand in increasing our export number a little bit. That could tighten the ending stocks for old crop, which in turn would tighten things for new crop a little bit. That is my one caveat there. And we'll get the April report to see if they actually move the ball and if we see more sales. But looking at the markets, corn, old crop about where it was. New crop, not struggling anymore. We're at least managing to be up a fraction of being unchanged. The story here again is going to be, it looks like it's centering right around old crop soybeans and a little bit to new crop beans. Crush margins moving up strongly, bean oil up on the crude oil, and wheat struggling. But Kansas City is actually turning positive, and I think that's leading Chicago higher. I don't have up-to-date cotton quotes yet. I was looking for the chance to see cotton acres be a little bit lower, but that did not happen. So we're probably not going to see any big surprises actually out of the cotton market here.
Sterling, we've kind of come to the end of the line here. Any last comments on the surprises today outside of the corn acres?
Corn and bean acres were the two big surprises. Cotton a little more than expected, but again, not enough to matter. Winter wheat acres being strong, but we have the concerns there. We did have some big news coming out of the cattle market with noticeably higher cash values. That's setting the stage there. And the inflation numbers were better than expected, and that is giving stocks a bid here. Interest rates coming down a little bit. And the credit default swaps on the banks, both in the United States and Europe, improved week over week.
Well, very good. Very good. We appreciate everybody's attention.
Brooks, you cut out. We do appreciate everybody attending, and our next meeting will be the April WASDE. Watch the emails for coverage on that. This has the potential to be a little bit more interesting of a report, given what's going on both with exports and the soybean crush. And with that, everybody have a good day.